Yes, ladies and gentlemen, the 2019 Trends in Investing Survey was published earlier this month in the Journal of Financial Planning. Our Moneyman certified financial planner Paul Fain joins us now to review the survey's findings. Paul, as always, thank you for being here.
Morning.
This is an interesting survey to me. What's going on here?
Well, what this survey found, Sean, is that financial advisors are primarily recommending exchange-traded funds, ETFs, which are a contemporary form of mutual fund, about 88% of the time. 80% of the time, still recommending the good old stable money market fund. And the traditional mutual fund still is pretty high on the list of types of investment products that advisors use.
I can see that, yeah, like 80%, 70%,
yeah.
quite a bit. So which investment vehicles are expected to be used more frequently now here in the next 12 months?
Well, I think the momentum on exchange-traded funds, on ETFs, continues. Advisors say they're going to continue to use these and use them more. A little surprising that 25% of advisors said they're going to use cash instruments more in the coming months, which might be a little tip of the hat towards caution and some conservatism. And then environmental and social governance type funds, socially responsible investing, continues to increase in advisors' portfolios.
Very interesting stuff. And then which topics do you think your clients have inquired most about over the last year or so?
Well, when surveyed, the clients of investment advisors had said that, top of the list for them is the effects of volatility on their portfolios. We've seen some real highs and lows over the last, 12 to 18 months. Investors are interested in cannabis.
How about that, right?
They're wanting to know what's going up in smoke. Also on the list were tax impact, fees, and in last place was interest in cryptocurrencies. Only 1% of advisors that were surveyed said that at this point that they think cryptocurrencies are a valid investment option.
That's interesting. I know Facebook just came out with something new on that as well.
Yeah.
So, well, let's talk about what the economic outlook for the rest of the year looks like, because we always want to know about that. I mean, obviously, if you have any investments at all.
Yeah, well, according to the survey in the Journal of Financial Planning, advisors had a somewhat of an uptick in bullishness over the next 6 months, but conversely, over the next 2 years, an uptick in concern about possible recession and pullback in markets.
Very interesting. So it's definitely something that if you have some money set aside, whatever, you definitely want to talk to your financial planner and stay in constant contact. I imagine.
Yeah. I mean, that communication's helpful, so at least you have realistic expectations about the next 6 months, 12 months, 2 years, 5 years.
That makes sense. Okay, fast market fact now, Paul. So what do you have for us today?
Well, when asked in the survey, this Trends of Investing survey, advisors were weighed in on what they were expecting for the stock market, or AKA equities and fixed income investments. And the good news, Sean, is that projected returns are positive, about between 5 and 6% for the stock market over the next 12 months, and 2.9, 3% for fixed income, like bond type investments. So positive, humble for the next 12 months.
Stay a little conservative.
Yeah, stay a little conservative. We'll always take more.
Yeah, definitely. Paul, thank you so much.
You bet.
And if you have a question, of course, for Paul, it's paul@assetplanningcorp.com. He's right here in Knoxville.